BlackBerry is about to report earnings for Q1 fiscal year 2024 on June 28th, 2023 at 5:30 p.m. Eastern Time. 5:30 p.m. Eastern Time is going to be the conference call. The report will be released around 5 p.m., 5:15 p.m. Eastern Time. I'm going to go over the analyst expectations in terms of earnings per share and revenue. And I'm also going to show last year's revenue and earnings per share just to show a comparison to see if there's going to be year-over-year growth or what the analysts are expecting in terms of year-over-year growth or year-over-year decline. I'm going to also mention a couple things towards the end of the video about the shareholders meeting that was held yesterday. And I'm going to show some technical analysis in terms of resistance and support levels in terms of what you could expect on how the stock might react based off earnings, given if it's good or bad. Hopefully you enjoy the video. Hopefully you like it. First thing I'm going to show is the analyst expectations. So the analyst expectations in terms of earnings per share is coming in at a loss of 5 cents. So that's not bad because if you look at last year, it was basically around the same. So not really expecting much. And then the only reason why that's good is just so that way it's easier to beat analyst expectations. So that way the earnings seems good. So the share reacts well and positive. Now we have revenue coming in at an average estimate of 160.35 million. So that's good as well. And if I show you last year, so June 23rd, 2022, the Q1 earnings report for fiscal year 2023, total revenue came in at 168 million. So that's above the analyst expectations. So even if it just matches this or becomes better, if it matches it, then it's stay like flat for the year over year, but it beats earnings analyst expectations. If it comes in 169 million or greater, year over year growth beats analyst expectations, so on and so forth. And the earnings per share was at a loss of 5 cents as well. So that's on par with the analyst expectations. I'm going to also show last quarter too. It was 151 million. Now I know even last year's Q1, it doesn't necessarily mean that past performance is going to dictate future performance, but it's nice to see overall. So it was 151 million. So if it gets around that ballpark, I know quarter over quarter is not really the greatest comparison because they're seasonal in terms of sales and all stuff. But if it's around that ballpark, it's going to be a miss in terms of analyst expectations. And even though it will be quarter over quarter, like let's say 155 million, it's quarter over quarter growth. It just would be year over year decline. Year over year decline, which is not ideal. And then this earnings per share is kind of thrown off with the goodwill and so on and so forth. It was a loss of 2 cents per share, but then there was the goodwill as well for the Cylance purchase of 400 million or something around that ballpark. Can't remember right now on the top of my head. The next thing I want to go over is the stock performance, just because it's going to be really quick, and then I'll go with the shareholders meeting as well that was held yesterday. In terms of stock performance, right now it's sitting at around 497, so almost, in terms of the US, by the way, this is the US share price, so almost $5. Now if it does drop from the levels I checked, there's support at the 470 price point, a little bit of the 460 as well, but predominantly the 470. If it wasn't an earnings, I would say the 460 level would hold, but because if it's earnings, I don't know if it breaks the 470 and goes to 460. I don't know if the 460 would hold. Then the next level is around the 450, 440 price point. I know those are all pretty close, but the stock barely moves. That's why those levels are pretty close overall together. But then if it does break out, the level that would cause resistance would be the $5.30 price point. But then ultimately the 550. The 550 would be quite difficult to pass. The earnings, I believe, would have to be substantial, not substantial, but just decent enough where it's like, for example, year over year growth. If it beats analyst expectations, then I think it would be stuck around the 530, 550 price point. But if it beats year over year growth with analyst expectations, obviously it would be analyst expectations with year over year growth, but then we'd break the 550 and then head over to the next price point. It's a little bit in the 580, but predominantly I think it would go to the $6 price point. And that would be difficult to pass, unfortunately, because if from what I checked, it would break into like $6.07. But ultimately, just around that like range, like it just won't pass quite a bit. I know it seems like I'm rambling on, but it's just those are the main general sense for the price points. Now, in terms of what happened shareholders meeting yesterday, it was pretty good. It's not too bad. The only thing is though, for the general message for the whole entire meeting was that it's going to take a little bit more time. Like, so for example, BlackBerry Ivy, even though Pateo signed with BlackBerry Ivy and they'll get revenue from that, majority of the BlackBerry Ivy revenue will be coming in the next 2-3 years. So that is quite some time. smart cities and stuff like that. Like not necessarily smart cities, but a lot of revenue in terms of that relates to this will be coming in the next 10 years for that aspect. And they went over some partnerships too as well, but we're already aware of all the partnerships. Pateo for Ivy, we got NVIDIA, Adobe, all that stuff for other sectors as well. And then we have also, they had like breakouts kind of stuff in terms of what could drive revenue upside. So licensing, Ivy, and convergence. But convergence is for the IoT breakouts. Then they mentioned, what was I going to say? Oh, here's the BlackBerry Ivy partnerships as well. And this was more for the next 2-3 years revenue coming in from these partnerships and additional partnerships that will come through. Now, it was mentioned in terms of the evaluation. They have, like, for example, Morgan Stanley, I believe it was, coming in to evaluate the stock and to see how to add value for shareholders in terms of share price. They said if anything substantial comes from it, they'll share that with the shareholders. But if nothing comes substantial from it, there's nothing really to announce, or to share with the shareholders. And then there was Q&A. Essentially, Q&A was just saying that they understand that it's taking some time for bringing shareholders value in terms of share price, but they're working on it. And then John Chen himself is frustrated with that aspect and trying to improve that as well. But yeah, that was basically it for the video. Hopefully you enjoyed it. Hopefully you liked it. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. And consider subscribing so you'll be notified when I do upload the next video, because earnings is coming out at 5:30 p.m. Eastern time, and I'll be posting up the numbers as well once they come post them in terms of revenue and all that stuff, earnings per share. The only thing is, though, the conference call video, I'm not quite consistent. I'm going to try to work on that, but hopefully I'll post that video in the next couple of days as well. Thanks again for watching, and I'll see you in the next video. Peace.